Listen, if you ever failed a prop firm challenge, it probably wasn't because your strategy is bad. It's because you broke the rules. Overtrading, increasing size after a loss, or forcing trades. And one bad session and everything gets whipped out. So instead of trying to become a better trader, why don't you remove yourself from execution part entirely? My name is Dmitry Khoma, and I'm the CEO and founder of Khoma Algorithms, one of the fastest growing providers of an automatic trading systems for the retail traders and investors. And what I'm about to show you is not a strategy. It's a structured execution system that was built specifically for prop firm environments. And everything is designed around one objective: passing the challenge, protecting the capital, and generating the repeatable payouts. And the key part here is that it is fully automated. Trading view alert gets triggered, Common Access receives it and executes it instantly on the TradingView account. No hesitation, no second guessing, no missed entries. Now, this is where the most people get it completely wrong. This is not about predicting the market. The real reason why people fail prop firm challenges is not because they don't know entries, it's because they break rules under pressure. They overtrade, they change risk, they revenge trade after loss, and that's exactly what this system removes. K-Fusion enforces discipline mechanically. It doesn't hesitate, it doesn't get emotional, it doesn't deviate. Consistency is not something you try to have, it's built into the system itself. So now let's talk about data. These are full year backtest reports from both system, Atlas that trades MNQ, and K-Fusion that trades MYM, and the most important thing here is not the return, it's a behavior. Both systems operate within controlled drawdown around 10 to 12% while producing consistent returns over the entire year. No random spikes, no lucky trades. Just steady execution across different market conditions, and that's what makes it scalable. Because if you can control drawdown, you can apply the systems across the different account sizes safely. Now, depending on your capital, changes the way you use each algorithm, and it applies for both prop firm and live cash accounts. As if you are working with a smaller account, for example 25 to 50K prop firm challenges, or even $1,000 to $3,000 in live cash account, the goal is survival. At that level, you're dealing with around $1,500 to $2,500 of drawdown on the prop firms, or maybe $200 to $500 on a live account. So everything is sized to stay well within that limit. You're not trying to grow fast, you're trying to stay in the game. And if you're in mid-tier range, around 75 to 100K in prop firm challenges accounts, or about $5,000 to $10,000 in live cash account, now you have more room. Drawdown is around $25,000 to $3,000 in prop firms, or about $1,000 to $2,500 in live cash accounts. And this is where combining K-Fusion and Atlas becomes powerful, as you're balancing speed and consistency. And if you're working within a larger capital, such as 150K in prop firm account, or about $10,000 plus in live cash account, now the objective is scaling. You're managing about $4,500 in drawdown on prop firms, or several $1,000s of personal risk. At that point, you're not changing the strategy, you're applying the same system across more capital. Now, this one is one of the most important parts, because everyone asks the same question: how fast can I pass the prop firm challenge? And the answer depends on how you configure your risk. If you run system conservatively, K-Fusion typically passes in around 3 to 6 weeks. If you increase size slightly, balance mode, you're looking at about 2 to 4 weeks. And yes, aggressive mode can pass in 1 to 2 weeks, but that also comes with much higher risk of failure, and Atlas is different. It's not designed for fast passing, it's designed for stability and long-term consistency. So the system gives you flexibility, but always keeps risk control and measurable. And everything in Khoma Algorithms is built around one idea. Risk is defined before execution, not after. Max drawdown is capped, daily loss is controlled, position sizing adjusts automatically, and no single trade can damage the account. And that's not optional, it's enforced. And then performance here is not about making the most money, it's about not blowing the account. You want an equity curve that looks like a staircase, steady, controlled, predictable, because prop firms don't reward aggressive spikes, they reward consistency. So a little bit about risk management here. Let me simplify it with the real example. Everything is based on one formula. Maximum drawdown equals account size multiplied by the risk tolerance. So let's say you have $50,000 prop firm challenge and your real limit is about $2,000, that becomes your risk cap. And if you're trading $10,000 live cash account and risking about 10%, that's $1,000 in maximum drawdown. So basically what I like to do, I just go ahead on the trading view and I just run yearly backtest, and that maximum drawdown for that year is the maximum amount of money I'm willing to risk. If the number is slightly bigger, I reduce on the contracts. And if I feel that I can take more risk on myself, I adjust on those contracts slightly. And every trade is sized based on that number. So the risk always stays controlled before you trade. And our progression here is not forced, it's earned through consistency, as K-Fusion gives you more opportunities so it naturally moves faster, and Atlas is slower but more stable. And the key idea in this, as we don't increase risk just to hit a deadline, we let the system perform within the structure. As once you're funded, or once your live cash account grows, the goal changes. You're no longer trying to grow aggressively, you're trying to extract consistency. On a $50K funded account, that might mean $2,000 to $3,000 in payout. On a $20,000 live cash account, that might mean generating from $1,000 to $2,000 per month. And the system adjusts for that. Risk is reduced slightly, execution stays the same, because long-term consistency always beats short-term spikes. So every system has its own phases. The process is simple. First you pass the challenge, then you stabilize the account, then you reach a payout, and then you scale. Same system, same rules, no guessing, no switching. So this is the entire flow of Common Nexus, and it's where everything becomes real. TradingView alert gets triggered, and then it gets sent to Common Nexus. Common Nexus receives that command and executes it instantly inside trading account, whether it's live cash account or ProFirm account, in under 20 milliseconds of speed. Every trade passes through a risk filter before it even gets placed, so nothing happens outside of rules. And then at the end of the day, it's not built to look impressive, it's built to last. Built to pass, not gamble. Built to scale, not guess. And if you are serious about getting funded, keeping the account, and actually turning this into something consistent, this is the way you do it.